Sushil Kedia is with me right now. He needs no introduction, veteran technician. He's also president of the Association of Technical Market Analysts. Sushil, good to have you here. Sushil is coming back on the channel after a long time. The market has been extremely weak, Sushil. I think let's just put the big picture out for our viewers and let's do it one by one, right?
Okay.
Let's start with the dollar. That's a big one. Then let's go to the Indian currency, and then let's move on to oil and other things, right?
Okay.
So what's the big call really, as far as the US dollar is concerned?
See, the US dollar index, if we talk about that as a proxy for the dollar globally, has been in a 15-20 year kind of a downtrend within which last several years there has been a strong rally. The kind of huge crack that has been made last night on the dollar index contract and the way it was tottering, at resistances for last many months is, to my mind, a strong confirmation of a call I've been making for the last month or so, that at least a 10% and likely 12 to 15% drop in the dollar index is coming right away. We have lost about 1% and a half of that last night itself. Once so much happens, one will then decide if this 3-4 year rally will continue back and make into new highs. As of now, the doubt is this top is done, maybe we'll just come back and retest it. So broadly speaking, the days of dollar strength.
And just one point, a technical point, the dollar index, when you say it falls 10-15%, the dollar against various currency crosses will also move
broadly speaking,
will move in the same direction.
Not exactly all the time on each of the currencies the same day, otherwise, there will be no need to trade so many currencies.
Yeah.
But broadly, that sets the quantum of
and
the direction of most currencies.
Okay. What about the rupee? Does that mean the rupee appreciates?
The chart patterns on the rupee, independent of the dollar index, had been for a long time suggesting, and I've been making that call a little bit too early, that without crossing into 70s, going past 69 or whatever that number is, we are going to go and break 60. This sounds very counterintuitive. This sounds very counter-fundamental. With all the respect due necessary to fundamentals, they're most of the time backward-looking. And if, that's the nature of how fundamental information and data arise. And in this extreme sounding call, let's cut it into two parts. Right away, it's looking like, the USD INR top, or that way, the bottom in the rupee, has been made. And 66 is where it should find a lot of support, and a trading range between 66 to the recent highs can be visited once or twice or more. But eventually, with whatever time it passes at that 66 fulcrum, once it cracks that, that's where my call for, USD INR going to 59 or 58 will actually get triggered. But if I'm going to lay down a map for over the next 1 year or so kind of a time frame, that's the direction to bet in for me.
And you would bet in that direction?
That's what the bet is open now.
Okay. So first 66, maybe spend some time around there. If that breaks, then 60.
Sub 60.
Sub 60. And the time frame is the next 12 months?
Perhaps, yeah. You can't predict time and price both with precision. It's better not to do that, but that's a broad feel.
Oil.
See, the NYMEX light crude is currently rallying. This rally may be good for 39.42. There is not yet a completely confirmed strong signal that the lows are final. Maybe after this rally, they go to revisit that, or there is a minor breach of that. But in terms of, say, those who are not trading oil and, keeping an eye on that, more like as a strategic input to your overall investment strategy, on the range, say 102 to 28, wherever we, in this wide range, we are far closer to the bottom. And, the emotions, the panic, the pandemonium can be revisited. But in terms of, significant advantage to any investment portfolios for a regime of continued declining oil, I think, that's behind us now.
So what, $40, $42?
40 for traders, for traders or, speculators, 40, 42 is what can be looked at in the short term. But eventually, a retest back to 28, maybe going to 26, whatever. But say if you take a 1 year, if you take a 1 year view, let me put it this way. If you take a 1 year view, do not get surprised if NYMEX light crude goes past 80 and it may not, go down below 25. So that's the kind of broad call, and for the short run, there's a tradable rally that is going on up, and one should be on the long side.
Let's talk about gold.
Gold has been postponing, so to say, a humongous rise back again. A little bit of jargon should be tolerated here. Last 4 years, what it has been making is an ABC kind of a very huge correction from 1800 down to 1040. In the very short run, maybe in a day or two, for short-term traders, a sell signal might come again, which can go down back to that recent low, retest it. But trying and cutting it so fine now, instead once a final confirmation is made and we are past this 1140-50 kind of a number, that trend line is declining downwards. Earlier it was 1180 say a few weeks ago. For say strategic inputs into investment strategy over the next couple of years, I am not at all hesitant in taking a view that gold will go past $2,000. It won't go below $1,000.
Where are we now? Sorry.
We are currently about 1140.
Wow.
Maybe 1030, 1040 is where the final lows will be formed. Maybe the move will keep getting postponed by a quarter or two, or maybe it happens in the next 1 month.
Gold prices went up every year for 10 years, right? And then now for the last 4 years they've been
Correcting and consolidating.
You're saying the next move is around the corner.
The next large big move of a multi-year kind of time frame. I'm more comfortable taking a view that gold will go past 2000 rather than taking a view that it will slip under 1000.
And it is not necessary. They say that when there is panic everywhere else, people rush to gold. Obviously, that 10-year period shows us that is not true, right?
See, I'll tell you, gold is one super asset, and it is also a super currency. Gold is that unique contract which is both an asset as well as a currency. And in both it enjoys the status of a super asset and a super currency. So the kind of correlations gold has with all other assets are actually very variable correlations. In an early phase of a growth phase economy, gold will keep on having a correlation to the dollar. The value of everything is measured in dollar. And along with all assets, maybe gold will hum up. But in a panic case also, the spike up in golds can be far faster. So if you try to correlate gold to other assets, it's a much more complex function.
Yeah.
And there are different phases in which, there are different courses when gold acts as a different horse.
Yeah. China,
I think, there's too much of a consensus building up, which is the nature of markets, that China will keep drowning. On the longer run, technicals are not positioned differently. But in the medium run, say another 100 or 150 points further lower cannot be ruled out. But in the interim, over the next 3 to 6 months, I think, this news reading consensus, people read newspapers and form opinions, that's going to be a big shock. I think, let's put it this way, prospects for a Shanghai Composite to rally by 1,000 points and decline by more than 100 points, I would lean my hat towards a 1,000-point rally. And that would still be just an interim relief. The long-term trend still remains intact. And perhaps, after this kind of a rally, 35, 3,700 it goes to. And after that, again, it goes back into 10-year lows.
What was the level? I think it was 3,500 or 4,500. I mean, the numbers have changed so fast there. At which point the government there said that insurance companies, mutual funds can't sell stock below. Now, I don't know if it is 35.
That was 4,500. But say from 2,700, maybe we don't go below 2,600 and go back to 3,600. That's the kind of short-term, medium-term call I have on Shanghai Composite. Eventually, for the longer run, Shanghai Composite chart looks like it's positioned for going into 10-year lows. But an interim large rally in between to take people off guard is what looks like is positioning on the chart.
Is it showing up on charts, Sushil, or this is one of those calls? Bahut ghat gaya hai. There's too much pessimism.
No.
I want to take the other side of the trade.
Obviously, years of practicing charts is to reduce your suffering because of your own intellect. So I would rather go by the intellect of markets and not impose my own.
Markets are showing you that.
No, I don't impose my own judgments on markets.
Yeah.
No.
Okay.
That is economists do, or people who are really good at fundamentals do. The humbler technicians will follow the market.
Okay, so this is what the market is showing, Sushil. From 2,800 now, he's saying that in the next 3 to 6 months,
3-4 months, I think, yeah.
Okay, 3-4 months. 3,600 possible.
Yeah.
Okay, fair enough. Nifty, let's come to our market here. What is likely?
See, Nifty, let's begin from the very short term. Nifty from 70 to 30 odd to 7,600 was one leg of the rally. And the cracks over the last 3-4 days and coming back up to yesterday's low looks like an inner correction of this rally only. One more leg up perhaps to 7,700 is what I'm looking at. Whether it has already begun from today's gap up or it will be revisiting yesterday's low is something day traders have to be doing it in a very nimble-footed way. But broadly speaking, say about 7,700, 7,800 is where strategic decisions or speculative positions should be taken, and one should rather wait for that bounce up to that level and then short. And within the short-term rally, again it will look surprising, but those that have been deeply oversold, the PSU banks, Tata Motors for it's an interest rate sensitive Tata Motors, Maruti, not so much the other private banks or the HDFC tags or not even the other autos. These look like will have a stronger rally within the next 8-10 days. Even Reliance Industries, where I have a call that without going to 1100 in the next 6 months ever, it is going to go to 700. First cut is 800. I think even that can rebound up 4-5% within this pending rally and then decline heavily. And BPCL has definitely cracked out. I think
Let's show these stocks. Sorry, Sushil is talking about stocks. So he's talking about PSU banks, and he's saying stronger rally in the next 10 days. Tata Motors, Maruti, RIL. He's saying 4-5%
rally is possible. It's a trading stock right now. BHEL.
Yeah, BHEL. Okay. Anything else?
Idea Cellular.
Okay.
These are the stocks for very short-term traders, who are nimble-footed to play for an 7-8 days kind of a rebound of 10 to 20%. But for most who are not so nimble-footed or glued onto a screen throughout the day, let this market rally up a bit more. And the medium-term direction definitely remains low on the lower side, on the downside. And as this rally exhausts itself over the next week, 10 days, one should be looking to short across the board again.
Yeah. There are many PSU banks. Any ones in particular?
See, a lot of them, and for regulatory sake, I like to avoid delving in detail until I take a SEBI registration, which I am in the process of.
Okay. Just for full disclosure, these stocks, Tata Motors, Maruti, RIL, BHEL, Idea, do you have positions in them?
It's always good to, nothing stops me from taking a position in the next 5 minutes. So when I put my opinion on something, a good assumption is to make that I have a bias on them, I have a vested interest in them.
Fair enough. No, this is for full disclosure, absolutely. Put your money where your mouth is. Just one large, slightly bigger question, top-down more question. Is the bull market still intact, Sushil?
Prashant, these are definitional terms. What is a beautiful flower? Somebody will choose a rose and somebody will choose a lotus. But in definitional terms, there is a permanent bull market in equities. Growth of population, inflation and growth of money supply. On the long run, stocks are continuously compounding only. But if we get to a more realistic way of looking at things, I think, the move from 2009 lows looks like a big cyclical move, and within which last 1.5 years, this dip that is coming in Nifty is only a temporary correction. I think, wherever we finish it at 6,900.
No, you're saying this move started in 2009.
From the cracks of 2009,
right.
The global rally, the move up in equities is looking like a long 8, 9, 10 year cycle. So I think within that, we are somewhere in the middle on the Indian equities, and this last 1 year's correction is only to be treated as a correction. I don't see it as a kind of a, universal pessimism and everything is going haywire. It's a correction, Put it this way, we got too euphoric about, a change in government. There was a massive Modi premium built in. And now maybe, the Modi premium is melted away. The euphoria and the euphemism is gone. And maybe, once that settles down, which almost all of it has been done, both economically and from the financial markets perspective, once we have taken that, whole la bogala going up and coming down to that whole phase. So whether, 6,600 or 900 is more academic and cutting the hair fine. But to think in terms of over the next 3 years, whether Nifty will be past 10,000, 11,000 or 12,000 is much more realistic to me, rather than thinking that Nifty will keep on tossing around these levels or be in a long-term decline. I think one is going to be missing the massive bull market that is very much in place.
Sushil, thank you very much. It's a pleasure talking with you, and thanks indeed for that perspective. Very exhaustive. Thank you.